Okay, think about the device you're listening on right now, or the servers, running the internet, even AI.
Hmm.
What's the absolute core? It's the microchip. And there's this one company, ASML, in this almost unbelievable spot.
Right?
They are the only company making the machines that make the world's most advanced chips.
Yeah, it's pretty unique.
Without them, this Dutch company, Moore's Law, that doubling of transistors every couple of years, it just stops at the leading edge anyway. It's kind of staggering.
And what's really interesting is ASML doesn't make the chips themselves, right? They make the incredibly complex tools that let others make the chips.
Exactly, a crucial
Yeah,
difference.
it highlights how central they are, even if they're kind of behind the scenes for most people.
Precisely. And that's what brings us to today's deep dive. We've done a pretty thorough analysis of ASML. Our research is current as of May 5th, 2025, and their share price then was $690.33. So our goal today, especially for you, the learner, is to really unpack ASML. Is this company, which seems totally essential, actually a compelling opportunity from a value investing angle for someone like you wanting to get up to speed quickly but thoroughly?
Right. So putting on the value investor hat, we're asking,
Yeah.
okay, it's a wonderful company, no doubt, but is it at a fair price?
Yeah.
Is there that margin of safety?
That's the key question. So how are we going to tackle this? We've broken it down into 7 chapters. Should make it comprehensive, but, manageable.
Sounds good?
We'll start with business, understanding what they actually do. Then management evaluation, financial health.
Mm-hmm.
Then in the second half, market sentiment, ownership structure, a risk assessment SWOT style, and then wrap up with a brief conclusion.
Got it.
And just a heads up, all the sources we used are linked down in the description for you. Ready to jump in?
Let's do it. Okay, Chapter 1, Business Understanding. So fundamentally, ASML designs, builds, sells, and services this super advanced semiconductor equipment. Lithography systems are the main thing, right? Can you explain what those actually do?
Sure. Lithography is basically like printing, but incredibly precise. It's about projecting patterns onto silicon wafers using light.
Okay.
These patterns define where all the tiny transistors and circuits go. It's, well, absolutely critical for making any chip.
And ASML is the leader here, especially for the really advanced stuff. Which brings us to EUV.
Exactly. For extreme ultraviolet EUV lithography, ASML has a total monopoly. Nobody else makes these machines.
Nobody.
Nope. And these EUV machines use this extremely short wavelength light, just 13.5 nanometers. You need that to draw the tiny, tiny features on today's best chips. We're talking 7 nanometer, 5, 3, and even the upcoming 2 nanometer nodes.
Wow. So smaller nanometer number means more powerful chip, generally.
Generally, yes, more
Yeah.
transistors packed in. Okay, sole provider. That sounds like one heck of a competitive advantage. Why is EUV so special? Why can't, someone else just build one?
Well, it's the sheer complexity
Mm.
and the cost. Each machine is upwards of $185 million.
Wow.
And the tech itself, it's wild. You're firing these incredibly powerful lasers at tiny tin droplets, thousands of times a second, in a vacuum.
In a vacuum.
Yeah, to create a plasma that gives off that EUV light. And because EUV light gets absorbed by pretty much everything, even air, you can't use normal lenses.
Oh.
They have to use these unbelievably precise multi-layer mirrors made by Carl Zeiss. It took decades, billions in R&D, like over $9 billion.
Okay.
It creates this massive technological barrier, a huge economic moat, as investors call it.
Firing lasers at tin droplets.
Yeah.
Definitely not your everyday tech. And they're already pushing beyond EUV, something called high-NA EUV.
Precisely. High-NA stands for high numerical aperture.
Yeah.
It's the next generation. Uses a different optical design. Basically gets you even finer resolution down to 8 nanometers, which you'll need for chips smaller than 2 nanometers, packing even more stuff onto the chip.
So even tinier, more powerful chips are coming. What's new in the high-NA tech itself?
Well, one big thing is these anamorphic optics. It's clever, magnifies the pattern differently in 2 directions.
Huh. Why?
It means chip makers can keep using their standard size masks, which saves them a lot of hassle and cost.
Ah, practical.
Yeah, and to keep things fast, because the exposure area is smaller, the stage is moving the wafer and the mask, they accelerate incredibly fast, like up to 32G.
32G. Wow. Are these out there yet?
They've started shipping. As of Q1 2025, they'd shipped 5 systems, mostly to customer R&D sites. Intel got one. High-volume manufacturing use is expected to start this year, 2025.
Okay, so EUV gets the headlines, obviously, but ASML still does a lot with the older DUV tech, right? They haven't just abandoned it.
Oh, absolutely not. DUV, deep ultraviolet, is still hugely important. Uses longer wavelengths, yes, but it's essential for less critical layers on those advanced chips.
Right.
And it's crucial for making all the slightly older, more mature types of chips that are still everywhere.
Okay.
ASML actually pioneered a key DUV innovation called immersion lithography, using water between the lens and wafer. That pushed DUV much further.
Ah, I remember hearing about that.
And importantly, DUV systems are just more cost-effective for many layers where you don't need that absolute cutting-edge EUV resolution.
So it sounds like it's more than just selling machines. There's a whole system.
Exactly. They call it holistic lithography.
Okay.
It means integrating the scanners with measurement tools, metrology, and inspection systems, like their YieldStar products.
Okay.
Plus computational software to optimize the process. They even sell refurbished older machines and provide a ton of customer support. It's the whole package to maximize yield and performance.
Right. Okay, so dominant tech, market monopoly at the high end, full ecosystem. Makes sense. Let's pivot to Chapter 2, management evaluation. Who's actually steering this ship?
The CEO is Christophe Fouquet. He took over in April 2024.
Okay, fairly new then.
Relatively new as CEO, yeah, but he's got a deep background in physics, and he was actually leading the EUV business for a long time. So he knows the core tech inside out.
That sounds like relevant experience.
Definitely. Key people around him are CFO Roger Dassin and COO Frederick Schneider-Monnery. They've both been there a while. The average tenure for top management is around 6.9 years. So there's some stability there.
Wasn't there a big retirement recently, though? Someone quite key, Martin van den Brink?
Yes, exactly. Martin van den Brink, he was the CTO, a real pioneer at ASML from the early days.
Yeah.
Hugely influential. He retired in April 2024.
Yeah.
He's still advising, and he's on the board at ASM International. But yeah, his departure as CTO is significant.
And have they replaced him?
Well, that's interesting. As of our research date, May 2025, they hadn't appointed a new CTO to the main board of management.
Oh.
Now, Fouquet, the CEO, has that strong technical background, like I said, but not having a dedicated CTO at that top level.
Yeah.
It does raise maybe a small question about the long-term strategic tech vision beyond the current roadmap. Something for you to consider.
Yeah, definitely something to note. What about their overall strategy? What are they aiming for?
Well, the big vision is about enabling tech to solve society's big challenges. Mission is focused on being the leader in patterning solutions for chips.
Okay.
Strategically, they've got 5 pillars. Things like customer trust, pushing that holistic lithography idea, staying competitive in DUV, and obviously nailing the manufacturing and rollout of EUV and high-NA EUV.
And financially, long-term.
Ambitious targets. They're aiming for revenue between €44 and 60 billion by 2030.
Wow, that's a big jump.
It is. With really strong gross margins aiming for 56–60%. They see huge drivers in AI, big data, automotive electronics, all needing more advanced chips.
Makes sense. How do they plan to hit those numbers?
A lot hinges on deep customer collaboration. They seem good at that, reporting high satisfaction scores. And managing that incredibly complex supply chain is critical too. Operational efficiency.
Right. And how do they use the cash this business throws off? Which leads us nicely into Chapter 3, financial health. Where does the money go?
Priority number 1 seems to be reinvestment. R&D gets a huge chunk, $4.3 billion in 2024, and they planned another $1.2 billion just for Q2 2025.
Wow. Constant innovation needed.
Absolutely. Plus significant CapEx building out capacity. But they also return cash to shareholders. Dividends are growing €6.40 per share for 2024. And share buybacks. They bought back $2.7 billion in Q1 2025 alone.
Okay, so a mix, but tilted towards reinvestment.
Yeah, significantly more goes back into the business than directly to shareholders right now, which tells you management sees strong internal growth opportunities. They think the best return is investing in themselves.
Makes sense in such a fast-moving field. What about management incentives? Are they aligned with shareholders? Low insider ownership you mentioned?
Yeah, compensation has the usual mixed base salary, short-term, long-term incentives tied to goals.
Yeah.
CEO Fouquet's total comp in 2024 was reported around $5.4 million.
Okay.
But yeah, direct insider ownership seems quite low. Fouquet holds a very small fraction of a percent.
Oh.
And tracking insider trades is tricky. Because they're a foreign private issuer in the U.S., they don't file the same frequent reports as U.S. companies. You rely more on periodic filings. So it's harder to get a real-time feel for what insiders think of the valuation through their buying or selling.
Pretty less transparency there.
They do have a code of conduct. They're part of the Responsible Business Alliance, so the formal governance pieces seem to be there.
Okay. Let's dig into those financials now. Chapter 3, financial health. Historically, how have they performed?
Exceptionally well, really. Over the last 5 years or so, revenue growth has been strong, like 17–18% compounded annually.
That's impressive growth.
Yeah.
Yeah.
And profitability is consistently high. Gross margins usually 50-53%, operating margins 30-36%, net margins 25-31%.
Very healthy margins.
Very.
Uh-huh.
Earnings per share, EPS, has grown significantly too, and they generate a ton of free cash flow, around $7 billion in 22 and 23. Trailing 12 months might be even higher, maybe over $9 billion.
Strong cash generation. What about the very latest picture, Q1 2025 and the outlook?
Okay, Q1 2025 itself looks strong on the surface. Net sales up 46% year over year. Gross margin was 54%, which was actually better than they guided for. Net income jumped nicely too.
Sounds good. So what's the catch?
The catch was the bookings. Net bookings new orders came in way below what the market expected. Only $3.9 billion total. And only $1.2 billion of that was for EUV.
Oof. That doesn't sound great for future revenue.
It definitely raised eyebrows.
Yeah.
Despite that, they kept their full year 2025 revenue guidance at $30-35 billion and gross margin 51-53%. So they still expect growth from 2024's $28.3 billion. But for Q2 2025 guidance, they gave a wider range for gross margin, 50-53%. And CEO Fouquet specifically mentioned increased uncertainty because of, and this is key, recent tariff announcements.
Tariffs. We'll definitely need to circle back to that in the risks section.
Yeah.
So weak orders, but still guiding for growth. Sounds a bit mixed.
It is. It introduces some near-term question marks.
How's their balance sheet holding up? Can they weather any bumps?
Looks pretty solid. Assets comfortably exceed liabilities, decent shareholder equity, debt is very low, like 21% debt-to-equity ratio. That's conservative.
Good. Liquidity.
Strong. They had over $9 billion in cash and equivalents at the end of Q1. Current ratio 1.5, quick ratio maybe a little lower at 0.8, but overall they look well-positioned to handle short-term needs.
And cash flow generation remains a strength.
Absolutely. Operating cash flow is robust, likely over $11 billion on a trailing 12-month basis. Free cash flow is significant, potentially around $9.8 billion TTM, with very high margins, maybe 33%. That gives an estimated FCF yield around 3.8% at the current price.
Okay. And profitability metrics. You mentioned high margins.
Consistently high, yeah.
Yeah.
Gross 51-54%, operating 32-36%, net 27-31%. And the return metrics are phenomenal.
Like ROE.
Return on equity, TTM, was over 55%.
Yep.
Return on invested capital, somewhere in the 33-43% range. These are extraordinarily high numbers.
Wow.
And that's really the financial proof of that powerful economic moat we talked about, generating returns way above their cost of capital. It's the sign of a truly advantaged business.
Okay. Solid business, good management, strong financials historically, but maybe some recent question marks on orders and outlook. Let's move to the second half. Chapter 4, market sentiment. What are the analysts saying? Wall Street's view.
Generally still pretty positive. Most analysts have a strong buy or moderate buy rating.
Okay. Price targets.
Average targets back in early May were mostly between, say, $860 and $1,100. So suggesting some upside from the $690 price, but maybe not massive near-term gains.
But you mentioned some divergence.
Yeah, crucially, Morgan Stanley reportedly cut their target recently, down to around $640. So not universal bullishness on the near-term price.
Interesting. How did the market react to that weak bookings number in Q1?
Negatively. The stock definitely took a hit after those Q1 earnings. That weak bookings figure, plus the new tariff concerns Fouquet mentioned, kind of dented the narrative a bit.
The narrative being?
That strong growth in 2025-26 driven by AI was a sure thing. Now there's maybe a bit more doubt cast on the timing or smoothness of that ramp-up.
But some see weakness as an opportunity.
Yes, definitely. Some analysts and investors are saying, look, the long-term story driven by AI and advanced computing is intact, so any pullback is a chance to buy into a great company cheaper.
Makes sense. What about short sellers? Anyone betting heavily against ASML?
Doesn't look like it. Short interest is relatively low, something like 1 day to cover. And borrow fees are low too, so not much active bearish pressure right now.
Okay. Chapter 5, ownership structure. Who actually owns ASML? You mentioned institutions earlier.
Yeah, it's dominated by institutional investors. Over 1,800 of them hold significant stakes. Big names you'd expect, Capital World investors, Fidelity, groups like that.
What does that tell you?
Usually high institutional ownership like that suggests a broad perception of the company as high quality, stable, with good long-term prospects. It's seen as a core holding for many large funds.
And insiders, we touched on this low ownership, hard to track.
Exactly. Reiterating that point, ownership by management seems low. And because it's a foreign private issuer, You don't get those frequent SEC Form 4 filings for insider trades like you do with U.S. companies.
So less signal from management buying or selling.
Pretty much. You have to rely on less frequent reports like the 6K or the annual 20F, or major shareholder filings like 13Gs. So there wasn't much recent public data available on insider transactions to gauge their view on the valuation when we did our research.
Okay, got it. Now let's get into the really crucial part for any investment decision. Chapter 6, Risk Assessment. Using that SWOT framework, strengths, weaknesses, opportunities, threats. Let's focus on the risks, the threats, and maybe weaknesses. What are the big ones inherent to the industry?
Well, the big one is cyclicality. The whole semiconductor industry goes through booms and busts, right? Demand swings.
Right.
And ASML is right in the thick of it. That Q1 bookings drop we talked about. Perfect example. When chip makers get cautious, they slow down equipment orders.
Makes sense. What else? Technology risk.
Always a long-term consideration. Could some completely different way of doing lithography emerge? It's possible, though the barriers are so high now, especially for EUV.
Right, that moat.
Exactly. But ASML has to keep innovating relentlessly just to stay ahead. Complacency would be fatal.
Okay, industry risks. What about risks specific to ASML itself?
Customer concentration is definitely one. They rely heavily on just a few massive customers. TSMC, Samsung, Intel.
So if one of them changes strategy or cuts spending...
It has a big impact on ASML's orders and revenue.
Yeah.
Another risk is just execution. Building and deploying these incredibly complex machines, especially EUV and now high-NA EUV, is hard.
Right.
Delays, technical glitches, lower than expected initial profit margins on new tech. Those are always possibilities. And finally, that supply chain. It's vast, global, highly specialized. Disruptions anywhere in that chain can cause problems.
Yeah, we've seen supply chain issues hit lots of industries recently. And then there's the whole geopolitical situation. That seems huge here.
Absolutely massive.
Yeah.
Export controls are a major factor, especially regarding China.
How so?
The U.S. and Dutch governments have restricted selling the most advanced EUV systems, and even some high-end EUV systems, to China.
Okay.
There was a surge in DUV sales before the restrictions fully kicked in, but ASML expects their revenue share from China to fall in 2025.
So it limits their market.
Yes, it cuts off a potentially large market. And the long-term risk is that it pushes China even harder to develop its own domestic semiconductor equipment industry, even if that takes many years.
Right. Beyond China export rules.
Just the broader tensions, U.S.-China tech rivalry, the whole situation around Taiwan, these create a volatile backdrop. A major conflict involving Taiwan, for example, would be catastrophic for the entire global semiconductor supply chain, including ASML and its customers.
Okay, let's zoom in on those U.S. tariffs mentioned earlier. What's the specific concern there?
Right. So in 2025, there's been movement on U.S. trade policy.
Wow.
There was an executive order, a presidential memo, things related to reciprocal tariffs. Initially, semiconductors and the equipment to make them, SME, were kind of excluded.
Okay.
But now there are these new investigations happening under Section 232 of U.S. trade law, specifically looking into imports of semiconductors and the manufacturing equipment.
Ah, so tariffs could be applied to ASML's machines coming into the U.S.
Potentially, yes. And that's clearly what management is worried about. Remember Fouquet citing recent tariff announcements for the increased uncertainty and wider Q2 margin guidance?
Yeah.
The CFO, Roger Hassan, basically laid out how tariffs could hit them. It could be direct tariffs on the multi-million-dollar systems they ship to U.S. customers like Intel.
Okay, that's direct.
Could be tariffs on parts or supplies they need for their service business in the U.S., or inputs for their R&D or any production they do in the U.S.
Right.
Plus, the risk of other countries hitting back with retaliatory tariffs, and just the broader economic slowdown if trade wars escalate, hitting overall chip demand.
So multiple potential impacts. Hard to quantify yet.
Very hard to put a precise number on it right now. But given the price tags on these machines, even a seemingly small tariff percentage could mean millions in extra costs per system.
Yeah.
And it might be contributing to that customer caution we saw in the Q1 bookings. Customers might be pausing big investments until the tariff situation gets clearer.
Makes sense. And underlying all this is still that long-term risk of China trying to build its own ecosystem.
Exactly. Even if they're years behind right now, the geopolitical tensions and restrictions only strengthen their resolve to achieve self-sufficiency. That's a strategic risk ASML has to constantly monitor.
Okay, quite a few headwinds and risks to navigate there. Let's try to pull this all together. Chapter 7, brief conclusion. What's the bottom line for you, the learner?
Well, wrapping it up, ASML is without a doubt a wonderful company. It's got that incredibly strong moat, fantastic long-term prospects, it's essential tech in a growing industry.
But
The challenge for a value investor looking at that $690 share price back on May 5th is the valuation. It's priced for a lot of that future success already.
so the margin of safety is thin.
It seems pretty thin, yeah. You've got high multiples, you've got those recent weak bookings creating some near-term doubt,
Yeah.
and you've got these significant uncertainties, especially the tariffs and the geopolitical stuff.
Right.
So while ASML is probably, highly likely to be a good long-term investment, the price right now might not offer that discount to intrinsic value that a value investor really looks for as protection against things going wrong.
An exceptional business, but maybe not an exceptional value opportunity at this specific moment.
That sums it up pretty well, I think.
Okay. So that leads to our final thought provoker for you, the learner. We've talked about ASML's crucial role, the uncertainties. What single factor do you think will be the most critical for its investment returns over, say, the next 5 years?
Having gone through this deep dive,
Yeah.
the market position, the financials, management, sentiment risks,
Yeah.
especially valuation and geopolitics.
Yeah. What's the most critical factor?
I think it really boils down to two interconnected things. First, successfully navigating those geopolitical headwinds. How did the U.S.-China trade policies evolve? How does that directly and indirectly affect ASML's market access? And just as importantly, their customers' willingness to make huge investments.
Okay. Geopolitics is one. The other.
Continued flawless execution on their technology roadmap, especially getting high-NA EUV adopted smoothly and effectively into high-volume manufacturing. They can't afford missteps there.
So navigating external storms while perfectly executing internally.
Pretty much. How well they manage that combination will likely be the biggest driver of their performance and investor returns over the next few years.
Okay. So the learner, we hope you'll mull that over. Think about how those factors weigh in your own view of ASML. Maybe you revisit your own thesis. Keep researching. And if you found this deep dive useful, if you like getting these concise, insightful analyses designed for understanding, definitely consider subscribing to the Stock Analytics AI YouTube channel. We'll have more explorations like this coming up.
And just the usual reminder, this analysis was based on information available as of May 5th, 2025. Things can change, and there are always uncertainties. This is all for informational purposes, definitely not financial advice.
Right. And the source material involved both AI tools and traditional research methods. Thanks for joining us on this deep dive.